Hello guys, welcome back to Hari Academy. This is your faculty Sudarshan for your paper for accounting. So why it is an accounting? You said it is a corporate accounting, right? Yes, the class is about the corporate accounting part. But the thing is, you should know whether the corporate accounting has been exist or not. So basically today we are completely going to discuss about the introduction, basically what is a journal, what you need to put. This will set some base those who are starting directly on their group 2 preparation. Now let us start. You'll just listen and think to it. Whenever I say write something, you will write it. Okay, otherwise simply think about it. Introduction to the accounting. Let's say if I say something known as accounting, accounting will have branches. Like a tree, it is having some branches. What are those branches? Number one, that is those who have studied from your 11th, 12th and your BCom, that is your financial accounting. Then number two, that is cost accounting, which is a predominantly for you to prepare for your examination for CMA Inter. Next one will be a management accounting, which is another important paper for you to understand the management techniques. Fourth one will be human resource accounting. Fifth one will be social responsibility accounting. So you are going to study financial accounting, cost accounting, and management accounting in CMA Inter level, and human resource accounting and social responsibility accounting in CMA final level. It is a final portion which you think about that social responsibility accounting, everything, the emergence of new accounting technique, everything will be studied over there. Sir, where the corporate accounting is there, sir? No, there is nothing branches in accounting called corporate accounting. In financial accounting itself, they have divided into, for your CMA Inter alone, they have divided into financial accounting as one part, and whatever the portion related to company, they incorporated and a separate paper called corporate accounting. That's how the corporate accounting has been evolved. Basically, it is a financial accounting. You are studying an accounting. You are studying only a financial accounting. That financial accounting is only to the corporates you are studying, so that the paper name itself is corporate accounting. There is no branches of accounting called corporate accounting. Basically, you are only having a financial accounting. Okay. Now, my next question to you is to think you, what is the purpose of studying an accounting? If I want to study something, I should know what is a purpose. You can chat with me, just chat. Those who are also watching this recorded videos, you can have also an option to chat with us. What is a purpose? Why I need to study an accounting? Why? If you ask why in accounting, then you will surely score very good marks. What is a purpose? Why I need accounting? What is a purpose of accounting? Basically, the purpose is for three. One, I am not getting into corporate accounting. As of now, I am fully focusing on what is an accounting. I'm just giving you a layover, what is the basis required to understand the further chapters like corporate accounting, company final accounts, that is schedule 3, cash flow statement most importantly. First one is to find out profit or loss of the business. Find out profit or loss of the business. That was the first point. I just need what is my profit or what is my loss. Then the second one is to know. Second one is, as we have got the comments from the thing, to know the financial position, right? But basically to know the assets and liabilities of the business or of the organization. Next, to assess the cash flow of the enterprise or cash flow of the business. Sir, basically you are saying this is the three purposes in accounting. These are the only three purposes in accounting. You are studying everything to find out all these three. The hard and work of branch accounting, departmental accounting, schedule 3, electricity company, insurance company, banking company. Everybody is keen to know what is a profit or loss, what is in hand, that is your assets, what we own is assets, what we owe is liability. O means OWE. What we owe is a liability, that is an obligation, that is a responsibility. What we own is an asset. What we own is an asset. Sir, is this only three things we are studying? Again, I am telling you, these are the only three things in accounting. That too is very simple. As we are studying, we will give an in-depth study about what is a cash flow of an accounting. Okay. Sir, what is profit or loss, sir? If I say simply, that is profit or loss. Sir, what is the financial meaning of it, sir? To understand what is profit or loss, you can say, if you say profit and loss, everybody will understand, no? So what you are going to say, you will say in a polished language, that is financial performance. This is a one way of saying the profit or loss account. Or you can also say financial results. If I say financial performance, that is merely a profit or loss. In layman's language, it is profit or loss. In a professional language, it is a financial performance. What is a financial result? Next, to know the assets and liabilities. What is in my hand? Where is my building? How is the value? What is the value? Is there any bank loan for me? If I am checking like that on that particular date, profit or loss, I am more interest for all the year. But for the asset and liabilities, what is it with me today? That's what my intention of the business. So this we can say it as financial position, so that we will prepare balance sheet. Here to find out profit or loss, we will prepare profit and loss account. We will prepare profit and loss account. So that only the balance sheet is also known as position statement. Balance sheet is also known as what statement? Position statement. Profit and loss is also known as income statement, or statement of profit or loss, or statement of income, or income statement. Okay. This is a basic three purpose. If somebody asks you why you are studying accounting, you need to say, I am going to find out the financial performance of the business, and to know the financial positions of the business, and to assess my cash flow of the business. If you are starting a business today, you should also in an intention to find out the profit or loss, what we own, what we owe, and what is a cash flow. Merely a cash flow is nothing but what is an inflow of the cash into the business, how I utilize that cash towards the business. Basically, an inflow and outflow in cash will be recorded in the cash flow. The most important key component in a financial statement is a cash flow. Every company will fail. Every company will be bankrupt, not because of they are making a losses. Losses may be one of the reason. It is only because of not to having a proper management of a cash flow. They are giving more credit time. They are giving more debt time to repay, or they are asking more time to repay. These are the major intricacies which will be there in the cash flow statement. While we are deeply dive into the cash flow statement part, we will study in depth about the cash flow statement. I am giving a practical aspect like a chartered accountant. If you are a chartered accountant, what you need to do, how you need to analyze the chart, how you need to analyze the financial statement, everything we will studying in a practical way. So basically, if you are studying an accounting, if you are studying a management accounting, or if you are studying that financial accounting, especially for financial accounting or corporate accounting, you are in a position to find out profit or loss, to know the assets and liabilities, to assess the cash flow of the business. Then once you prepared, once you find out the asset and liabilities, once you know the cash flow, then it is a view of management accountant to analyze, to take decisions. It is the view of the management accountant to get the data from you, from a financial accountant, and that management accountant will do an interpretation, will do an analysis. Okay, so these are the areas which you need to take care while studying an accounting. Each and every chapter, our intention is to find out profit or loss. Our intention is to find out asset or liabilities. If the question follows, we will follow the cash flow of the business. Next. Basically, tell me, what is a profit? Tell me what is a profit. Just think and answer. Don't tell me profit is credit. From the class, move on slowly and gradually. I will tell you what is the significance of putting debit, what is the significance of putting credit, what is DR, what is CR, why we are putting debit, no, why there is an R comes, why there is a credit, why there is a credit comes. Like this, I will going to tell you. I don't want any of my students should not able to having a good grip on the accounting part. So what is a profit basically? Profit is a gain from the business. How the gain? That's what my question is. Basically, you will get some money, you will spend some money, that portion is known as profit. Basically, what? Income minus expenses is equal to profit. If somebody asks you what is a profit, I got 100 rupees, I spent 80 rupees, 20 rupees is with my hand, that is known as profit. Now the point is, in financial statements, that too for balance sheet, we want to know two things. One is what we own. Next one is what we owe. What we own and what we owe. O means what, sir? O means liability. O means what? Liabilities. What we own is an asset. Why you are studying, sir? Directly you can move on to company accounts now. To understand what is a journal, no? Many of them don't having a grip over what is a journal. What is a ledger? What is a trial balance? These are basic three things which is needed. Okay, even the ledger part is also not required. Even the trial balance is also not required. The basic thing of journal should be understood. When the classes is move on, this is our day one of the corporate accounting. When the classes is move on, we will slowly and gradually study everything. Now the assets and liabilities. What is an asset? What is an asset? Asset means a right to receive. In accounting, we will not only focus on what we own, we will also record as an asset what we have a right to receive. Example, debtor. Why we are debtor? You can say as a debtor also, that a correct pronunciation will be a debtor. This is not debtor, this is debit. This is what? This is not debtor, this is debit. There is a contradiction between DR and CR also. I will also tell that intricacies. You can also find it out. CR means not creditor. You are saying credit, no. At the same time, it is credit only. Debtor means DEBTOR. Debtor. Debtor is a personal account. Debit is the rule. Debtor is a personal account. Debit is the rule. The rule will not become an account. So a right to receive is a debtor. What is a liability? Liability is nothing but an obligation to pay. It is an obligation to pay. What is an obligation to pay? I get some money from you, like a borrowing. I need to give it to you, right? That is known as a liability. Liable. I am liable to some person. I am responsible for that issue. Like this, I am responsible for that situation. I am responsible for that activity. In accounting, if I say responsibility means, what is the difference between an English and accounting? So we will term as liability. So that we will also term as what we owe. That should be pronounced what we owe. OWE. Next thing. Sir, loan borrowed is an asset or liability, sir? Loan borrowed is a liability. We need to repay to them. Okay. Sir, then loan advanced. If I say loan advanced, means it is an asset. Loan advance means it is an asset. And in accounting also, if I have a vehicle, if I have a vehicle, I will call them as for the vehicle. I have a right to use for the vehicle. If there is something called AC is there, I can able to use that. Even not only we will record what we own or what we have right to receive, we will also record it as an asset, what we have right to use. If you have right to use on something, that is your asset. You have full control over it, that is an asset. This is what you have studied in AS10, that is property, plant and equipment. Next thing I will tell you. Person. Sir, person, shall I write to use that person? No, guys. How you can use that person? From the person in accounting, you have a right to recover. You have a right to recover. If I say vehicle, car, machinery, I have a right to use. If I want to tell a so polished meaning, asset means held for business enterprise, which is greater than 12 months or less than 12 months, and which will derive a future economic benefit. FEB, future economic benefit. Vehicle, if I have right to use over it, that is my asset. If I have right to recover, means how you can recover? From person only you can recover. That person is known as an asset. So that we will call that person is known as financial asset. That person is known as which asset? Financial asset. In examination, if they ask you what is a profit and loss account or what is a thing, you cannot say to find out. You should not use the word find out. Find out is a layman's term. What you need to do? To ascertain. Ascertain means to compute, to ascertain, or to find out, or to know, or to assess. These are the different meanings which you can say. To ascertain financial performance of an organization of the enterprise. You can say, instead of business, you can use the word the enterprise. The next one. To ascertain financial position of the business. As I already mentioned, this financial performance is also known as financial results, or if you come across anything called net result, it is not internet result. Net result means it is a profit or it may be a loss. What is a net result? If income is greater than expenses, you will get a profit. If income is less than expenses, you will get a loss. Then to ascertain the financial position of the business, this position of the business is also known as we have already discussed, it is a position statement. In that position statement, you will record two things. One is asset and liabilities. This financial performance is also known as profit and loss account, or is also known as performance statement. It's also known as what statement? Performance statement. Everybody understood? Everybody understood? Yes. Shall we move on to, guys? Shall we move on to the next part? Shall we move on to the next part? Yes. Sir, this class is going to be a very basic thing, sir, so that I'm just want to give you a good grip over an accounting thing. Now, we will just basically start with an accounting process. Even this will be helpful for financial accounting students, those who are studying group 1 as well. This is applicable for CA foundation, this is applicable for CMA foundation. Everybody have this. Okay, this is a basic thing which I'm going to discuss. First, what is an accounting process, or first thing, what is in accounting process? Very first thing, I'm not going deep into that accounting process right now. Surely I will go some to the depth, but I'm just now saying a prima facie thing. First, it should be start with source document. What is a source document? I'm going to give you a clarity over that source document, which will give you lakhs and lakhs of rupees if you understand what is a source document. If you're going to some company for auditing, if you don't know about what is source document, then you will surely suffer. At that time, you should put your heads down in front of very good persons. So basically, one is source document. The second step is transactions and events. The second step is what? Transactions and events. Third one will be a journal, ledger, trial balance, and then final accounts. Why it say final accounts? Means after that there is no accounting. After that there is no accounting at all. My last process in the accounting is to prepare two things. One is to trading and P&L account if it is a non-corporate. If it is a corporate, only have an intention to prepare a profit and loss account. That profit and loss account is also an inclusive of trading account as well. That is revenue from operation, cost of goods sold, changes in inventory, everything we will study. Next, my final accounts will be a balance sheet. Sir, only till the balance sheet is an accounting. Yes, that is only an accounting. If you know the journal, in today's scenario, automatically system will give you a balance sheet. If you have a 200% clarity or 100% clarity over the concept of journal, then balance sheet will be easily prepared. If you don't know about the journal, it will be suffer for you. So basically, why we are preparing a trade P&L account? To ascertain profit or loss, balance sheet, assets and liabilities. Sir, I am going to ask you a next question. Why Sorry for the trouble, guys. It is a mic issue. Mic is having a power off. So the decision making, what is a continue? To continue is nothing but whether I will be in a profitable position or I'm making a good pay, so I can continue the business. This is the one decision they take. Or they can take expand. When they can expansion, sir. When some person I am doing some business, sir. When I can go for expansion. When you have a crores and crores of turnover, and more than that, you are having a surplus of reserves, that you are continuing a business in one prominent location for 10 years. Once you sustain, on the 10 years, you make lots and lots of money, and you save so much money in form of profits and investments. Then you can expand your business to another prominent location or to another state, which you can provide your valuable services or valuable products. That's how the expansion will work. What is the close down, sir? Close down is nothing but closing down of business or shutting down of the business. Sir, I'm having 5 businesses. Out of those 5 businesses, 3 businesses are making losses. If I'm going to close the 3 business and going to continue with the 2 business, that is known as downsize. I'm completely going to wrap away from this business, going to hide from this business. I'm not going to do anything. I'm going to focus on another way. So this is known as close down, closure of business. Now the second thing, why the business person is interested in P&L, that is to find out profit or loss. The second thing will be for comparison. Will be for comparison. What is the comparison, sir? How many types of comparison are there? Can you tell me? You can just unmute and tell me, Haridashi. What is the types of comparison you are having? Something you have studied, no? Inter or intra, something like that you have studied, right?
Yes, sir.
Yes. Basically, comparison of 3 types, not 2 types. Comparison of how many types? 3 types, not 2 types. One is intra. Next one is inter. Intra firm. Here the firm means an organization. Not firm means partnership firm. Firm means here it is an organization, or in this basic chapter we will interpret as business. Intra firm and inter firm comparison. Intra firm or inter firm comparison. What is an intra or inter firm comparison? Intra or inter firm comparison. Intra, if I am going to compare my previous year with my current year balance sheet, or previous year P&L with my current year profit or loss, or last quarter with this year, last year last quarter, previous year last quarter with the current year last quarter, I'm going to compare. Then it is intra-firm comparison, basically happen within an organization or within a firm. That is known as intra-firm comparison. Sir, then what is mean by inter-firm comparison, sir? I will give you a good clarity over this concept. Current year's profit will be compared with the word is competitors' profit. Word is what? Competitors' profit. Sir, Geo telecommunication is doing some business like telecommunication providing services. That Geo person, that Mukesh Ambani is having an intention or more interested in his own profit. And if I want to compare with Airtel, okay, Bharati Airtel, they will take their balance sheet, they will have your own balance sheet, and if you compare that, that is known as inter-firm comparison. For Jio, Airtel is a competitor. For Jio and Airtel, Vodafone is a competitor. Or for Vodafone, Jio is a competitor. Who is in Prima? That is a Jio. That's how you are studying a cash cow. That's stars. That's everything you're studying in strategic management. No, that's how you need to compare and study. Now, So what is the third one? I have heard about only two things, intra-firm and inter-firm. You say something known as third one, right, sir? I'm more interested to learn that third one. What is it that, sir? This is known as pattern comparison. This is known as what? Pattern comparison. Sir, what is this pattern comparison, sir? What is this? Patterns comparison, sir. Patterns comparison is nothing but current year's profit should be compared with or will be compared with industry average profit. What is the industry average profit, sir? Let's say I will be in a telecommunication business. I will consolidate all the profits of the business, those who are doing telecommunication. If I take 10 companies, or basically I will take 5 companies. On the basis of the 5 company, one is BSNL, Airtel, Jio, Vodafone, or some other one. We will take it as 1%. This 5 having 500 crores, 200 crores, 300 crores or some money. And if you are going to add that total, and if you are going to divide it by them, and you are going to compare with your profit with that industry average profit, you should know what is the pattern of comparison you are having. Basically, it is a pattern comparison. How they find out the industry average profit, that is a different story. Next. So basically, we studied. If some person is interested, want to know about these two things, sir, yes, decision making and comparison will be a key. Then the third one will be rate of return on investments. Rate of return on investments. What is the rate of return on investments? Basically, it will be known as capital comparison. How much capital we have contributed towards the business? 10 lakh I am contributed. Now tell me, I will give you a thing. It's the most important case study which will open up your mind of accounting. Now tell me, this is company A, this is company B. Who is more profitable company? Who is more profitable company? Think and answer. Think and answer. Who is a more profitable company? Everybody will say it is B, right? You should not just see the numbers of profit. Always look into the capital portion. Always look into the capital portion. Don't say by merely looking into the profit of A and B, say that A is doing bad and B is doing great. Maybe A will done this on the basis of 5 lakh capital. B may be done this on the basis of 25 lakh capital. Now tell me, which is more good company? Always you should take 1 lakh by 5 lakh into 100. 4 lakh by 25 lakh into 100. Give me a percentage value. Give me a percentage value. Take a calculator and give me a percentage value. What is the value for first company? 20%. What is for the second company? Company B. What is the percentage?
Sir.
How much?
16%.
16%. Now tell me which company is more. A is having a company. From now onwards, don't merely look into the profits. Always check what is the investment in we have provided in that company, what we have contributed in the company. Then compare with that. That is known as rate of return on investment. Basically, whatever we finding out, that is known as actual rate of return. If I have contributed something, I have an intention to get some rate in my mind, right? Like if I'm investing something, I need to get 15% return. If I'm investing something which I need 10% return, that return is an actual return or if you are expecting to be there. So that is known as expected rate of return. Where the happening of 20 and 16 is an actual rate of return. Actual rate of return. Every business person is interested to know this. Next, the fourth one will be, you will wonder on that part. One is, the last and final one is government regulation. If we don't have any government regulation or statutory regulation, we will not prepare accounting as well. In Dubai and all, there is no taxation. Okay, so at that time, they will never follow good process of accounting. There is no systematic way of doing an accounting in that. We only go there and we only prepare their accounts. We only follow, this is the schedule you need to follow. This is the way you need to prepare an accounting. So in Dubai, Indian chartered accountants and Indian cost accountants are working. Because there is no taxation. Even though there is a taxation, there is no proper regulations over there for a business person. Business person, they will more see about the health aspects. They will more see about environmental aspects. They will not worrying about your environmental values, your financial values. This is how you study till the time being. For a 30 to 40 minutes of our discussion is purely dependent on why we are studying an accounting, why I need to prepare and interested to prepare a P&L or interested to know the profit and loss. Now, the next question you are going to ask is, why assets and liabilities? Next question is what? Why assets and liabilities? Basically, I will tell you, if you understand, in accounting, there are only 5 principles or 5 elements. Like in a life, we are having water, planet, earth, fire, then air. On the basis of those 5 things, in Tamil we will call Nilam, Neer, Kaatru, Agayam, Neruppu. Okay. In the same way, in accounting also you are having 5 elements: asset, liability, capital or equity, income or revenue, and then expenses. Sir, capital and liability is same or different? Sir, obviously it is different, sir. Capital is different, liability is different. Somebody is saying liability, you should not say it is a capital. Liability will be different, capital will be different. Capital is owner's liability, owner's equity. If I say simply liability, means it's an outsider's liability, third party liability, not to the owner, it is other than owner. Now the question is, why assets and liabilities? Basically, the thing is to check solvency of the company. To check what? Solvency of the company. Now I'm going to give you enormous clarity over solvency. Sir, I will tell you one thing, sir. If there is no accounting, there is no chapter called financial management. If there is no accounting, there is no chapter called financial management. Accounting as an extension, the second version, or you can say it's the second part. Okay, accounting 1 is a base. If you say accounting part 2, like a movie, that is a financial management. Sir, without a financial management, accounting can work. But without an accounting, financial management, we will never prepare. Accounting is an endpoint. From an endpoint of an accounting, financial management starts. In financial management, we will not talk about this preparation of assets, preparation of liabilities, and all you won't tell. Already they give everything. They will give you information. Now at the time, whether I can do that, whether I can take that decision or not, you are going to check that. Okay. Now to check the solvency of the business. What is mean by solvency? That's my next question. What is mean by solvency? Solvency means a capacity or capability to settle your liabilities. To settle your liabilities. Sir, what liabilities, sir? Basically, external liability. If I say external liability, it is not to the owner, it is to the outsider. Okay, sir, now I will tell you one thing. Give me that. Solvency position should be checked or balance sheet should be prepared as at a particular time or a particular period, particular point of time or a particular period of time. That is known as balance sheet. We are preparing asset, so that only we are using the word asset or as on that date. So to check the solvency of the company, capacity or capabilities to settle liabilities, you say, sir. Now I will give you one clarity, sir. You need to understand that, sir. My assets are 100 crore. My liability is 50 crore. Next question is, my liabilities are 100 crore. Sorry, my assets are 100 crore. My liabilities are 120 crore. Means external liability. I'm not including any capital. Now tell me whether the firm is in a good position or whether the firm is in a wrong position. In case A, you are having net assets of 50 crore. You are having net assets in a negative 20 crore. Now tell me whether, assume this is company A, this is company B. Now tell me who is solvent or insolvent. Whether we will say it is an insolvent company, whether it is an insolvent company, whether it is an insolvent company or not. Basically, think and answer. Solvency. I'll give you enormous clarity over solvency and insolvency. If I say confidently, means you are surely going to get a clarity. Both A and B are solvent company. Both A and B are solvent company. But company A is a solvent company in a good position. Company B is a solvent company in a bad position. Sir, then I heard something known as insolvency, sir. What is mean by insolvency, sir? I surely want to know. Insolvency means unable to pay the debts. Unable to pay the debts and declared as insolvent by the court. Court order is required to know you are an insolvent person. Till the time being, you will known as solvent person in a bad position. Sir, how you can say confidently it is in a bad position, sir? Basically, sir, you are having a negative balance, means you are having a wrong position. This is on 2023, assume. On 2024, A is doing a same business and is getting 100 crore. L is again, he's got some borrowing so that it will increase to 60 crore. Again, A will be in a good position, like a net asset, 40 crore only. For B, now he is getting, assume, is married to Assume B is a male. You will talk about the company or owner, or A is a person, B is a person, solvent person, insolvent person you study. A is being a male. He will marry a female, right? The male, she is giving 100 crores as a gift. Her dad is giving B 100 crore gift. Okay, 100 crores cash. They are going to provide it for you. Or like in the form of donation, they are providing to the company.
The
Now,
voice is not audible.
yeah, just a minute. Yes, sorry for the again mic issue. From here after there will be no issue. Suppose B is getting married to some other person, he is getting a donation of rupees 100 crores. Then suddenly in the next year it is increased to 200 crore. From 100 crore it is increased to 200 crore, and the liabilities became 120. The next year he will become a net assets of 20 crore. He will be more prominent than A. He will be more good than compared to A. So basically, it is not about assets and liabilities. It's about the solvency position. Whether they are in a good position, whether they are in a bad position. The liabilities are more, they are in a bad position. The liabilities are less, they are
Voice
in a good position.
APS.
So I hope now the audio is clear, so that we'll set to learn that accounting subject really well. Something is distracting ourselves or something is wrong, we are going to learn something very new. That's how we need to think. So basically now B will become more prominent, a very good solvent person. Basically solvent is only dependent on that assets and liabilities area, whether it is a good or bad. Then insolvency means you need to unable to pay. You should say, I'm not going to pay your debts. I'm don't having any money. Even though I sell my own assets itself, I'm not having any money. So please declare me insolvent. So by the court will declare you as insolvent. Sir, insolvency, if I say, why balance sheet or why assets and liabilities we will prepare is to know two things. What is my short-term solvency? What is my long-term solvency? That's why the assets and liabilities are there. This is an extension of financial management which you will study. Okay, short-term solvency, long-term solvency. The short-term solvency is also known as liquidity. The short-term solvency is also known as liquidity. The short-term solvency is also known as liquidity. Then we are having long-term solvency. So I will give you one more example clarity over the part. Asset I am having. Assume you are having an asset of 200 crore. You are having a liability of 1,200 crore. 1,200 crore. Now tell me, what is my solvency position? What is my solvency position? It is 800 crore, right? That is what the solvency position. Now I say as a consolidated thing only asset liability. Now I change this to non-current asset. Okay. Assume non-current asset is 1,400 crore. Non-current asset is 1,400 crore. And my liability is 200 crore. My liability is 200 crore. Now tell me, what is my solvency position? 1,200. My next thing is, my current assets I am having 600 crore. And my current liability, okay, assume my current liability I am having is 1,000 crores. Current liability I am having how much? 1,000 crores. That will become 400 crores. So this non-current asset, what you are studying is long-term solvency. If I'm merely looking into it, I will be in a solvent position. If I say for a long term, I will be in a solvency position. I have obligation, I have a capability to repay my liability, to settle my liabilities. But in a short term, if you see, I am not capable. I have don't ability to repay my liabilities. That is known as short-term solvency. This is what you will study: current asset by current liability. You will say quick ratio, quick assets by current liability. Everything will be comes under that. From now onwards, if you say solvency means whether the person is a good person or in bad position, that person will be a solvent. If there's something is indicate, some court order is there, some paper has written, such as you are an insolvent person, then only you should assume that person is an insolvent. Okay, now you deeply understand what is a solvency. These are the very base structure I'm preparing for you to become a master in a corporate accounting. That basically in financial accounting. From here onwards, we are not going to use the word corporate accounting. It's only about the financial accounting. For companies, you are going to learn. For companies only, you are going to study. For CMA Inter, suppose the students are watching this video for CA Foundation, treat it this as a basic video. I have an intention to provide, if this output is very good, I have an intention to provide for foundation students as well, CA as well as for CMA, so that it will be helpful for you. Okay, so this is a base thing which you want to learn, which you surely need to understand. Next basic things which I want to make sure to pull up your socks to find out something you have learned about. 1/3 on cost is 1/4 on sale. Something you came across in your colleges or in your schools, in your graduation, everything. I'm going to give you enormous clarity over this cost and sales. We are going to do some analysis, or you can say some research, or to say some discovery over this profit and loss. Now tell me, I will just give you a base and then move on to slowly case to case. I'm having a cost of 100. I have an intention to make 20 rupees over the profit. So my profit will be 20, which will give me the sales. That will be 120 rupees. Now, find out the percentage of profit on cost. If somebody say find out the percentage of profit on cost, you will say 20 by 100 on cost, right? 20 by profit is 20 by 100 on cost. How the 20 by 100 you can write 1/5 on cost. This is in fraction. If somebody asks you what is a percentage, you should say 1/5 into 100 will give you how much? 20%. Will give you 20%. Sir, in the numerator, what we have written, sir? In numerator, we have written profit, sir. In denominator, what we have written, sir? In denominator, we have written cost, sir. You are calculating profit on what, sir? Cost, sir. So cost will get cancelled. You will get a profit. Cost will get cancelled. You will get a profit. Okay, that is a profit in value. If profit in fraction, it is 1/5 on cost. If a profit in percentage, it is 1/5 into 100 will give you a 20%. Sir, now I want to know what is my percentage of profit on sales, sir. What is my percentage of profit on sales, sir? It is 20 by 120 you should calculate, sir. If you are going to calculate 20 divided by 120 on sales, sir. If it is 20 by 120, it is 1/6 on sales, sir. If I say something 1/6 on sale, how much percentage? It is 1/6 into 100%. How much is 1/6 into 100%? 100. 1/6 into 100 is how much? Just tell me the value.
16.67.
16.67%, sir. That's it. Now, if we calculate on 120, if you calculate 16.67%, you will get a value something 19.99 or 20.111 like that. Okay. This is how you should know the value. Sir, here what you have written in numerator, sir. Just listen. 20 I have written. That is profit. That is profit. 120 I have written. That is a sales.
Profit divided by sales into sales will give me a profit. If I want to convert into percentage, so I will multiply by 100. So basically, if you look in a prima facie, 1 by 5 on cost is 1 by 6 on sale. 1 by 5 on cost is 1 by 6 on sale. Basically, what is happening? If you are thinking profit by cost, that will give you 1 by 2 on cost assumed. You are writing profit by sales. Profit by sales is nothing but profit divided by cost plus profit only sales. So it is 1 divided by 3. Already you are having a cost 2. Again, you are adding 1. So it will become 3. That is your sales. That is 1 by 3 on sales. If they give 1 by 3 on sales, now I move on to cost. From 3, you are subtracting 1 to arrive at a cost. That is 1 by 2. That is 50% on cost. 33.33% on sales is equal to 50% on cost. This is how you should understand. This is a basic thing which you want to understand. Now, from case to case, we are doing an analysis. Analysis. That is case 1. Assume, just clearly look into it and understand. Cost is 100, sir. Profit is 50, sir. Profit is 50. And my total value will be 150, sir. That is my sales. Now think and tell me. I'm going to give you a 3 key rule or 3 view of analyzing this. Sir, just 100 is there. Just 50 is there. Just 150 is there. You are going to analyze that, sir? Yes, we are going to analyze that. On interpretation of case 1, I have my interpretation of results. That is, in case 1, profit is less than cost. Is it right? My profit is less than cost. Is it right? Then my second interpretation is percentage of profit on cost is equal to profit divided by cost into 100. What is my profit? 50 divided by 100 into 100 will give me 50%. Will give me what percentage? 50%. Okay. Now my third interpretation. Percentage of profit on cost less than 100%, or percentage of profit on cost can be less than 100%. Means less than cost. If I say cost is 100%, my profit is less than, that is 50%. This is a finding we have found. I hope you have understood this. Now coming to the case 2, I'm going to give another important clarity. Sir, my cost is 100, sir. Cost is 100, sir. I'm going to make a profit of 100 rupees again, sir, to give you 200, sir. Is it possible, sir, to make 100% profit on cost? Yes, it is possible. In pharmaceuticals, that is in medical industries, the cost of manufacturing one medicine or one tablet may be 50 paise. They will sold it for 1 rupee. The cost of production will be for 50 paise or 1 rupee. They will sold it for 2 rupee. Suppose that one tonic what you are drinking, that may be for 50 rupee. You cost of production, you may get it at 100 rupee. So pharmaceuticals are making huge profits, sir. They will make a huge profit. When I was doing an audit for one of the pharmaceuticals company, which is located in Puducherry, like Strides, I think so. That company is making that kind of, I have seen the entire process of making a tablet over there. While an auditing, while an internship will give you a skill to enrich your knowledge, to give a skill to enrich your knowledge. Basically, if you get knowledge, you won't find a job. Basically, if you have a knowledge, you will not have any job. If you have an education, you will never have a job. you have 4 things to determine whether you are a profession or whether how you can earn money. By simply looking into a knowledge you cannot earn. Basically, first you will get an education. Where the education, through education, you will get a knowledge. Through education, you will get a knowledge. Through a knowledge, you will get a skill. Through a knowledge, you will get a skill. Through a skill, you will get a degree called or something known as profession. Education gives you knowledge. Knowledge gives you skill. Skill gives you a profession. And that profession will only pay you. That through that profession only you can earn. That profession only gives you money. The profession will becomes a job and then you will earn. If you once you are in a job, you will usually start at 2. So based on that only you should learn. While you are studying CA or CMA or CS, this is one of the professions. If I say something profession, you will surely get a knowledge. You will surely get a skill. Through the knowledge and skill, how you can get a knowledge? Through an education. Through an education, you will get a knowledge. Through a knowledge, you will get a skill. With these 2 things, you will get a CA or CMA or CS degree. With that CS or CA degree, you are going for a job and you are highly paid. So this is how the education system will work. What it requires, how it requires, you should only find it. Now, just getting back to our case 2, cost is 100, profit is 100. My sales will become 200. Now, give me your interpretation by just looking into the case 1. Profit can be, tell me guys, profit can be equal to cost. My case 2, what is the percentage of profit on cost? What is the percentage of profit on cost? Profit on cost into 100. What is my profit? 100 divided by 100 into 100 will give you 100%. Will give you 100%. My case 3 interpretation. Percentage of profit on cost can be 100%. Equal to 100%. This is a case 2 interpretation we have understood. Now come to case 3. Sir, what is the case 3, sir? Cost is 100. Cost is 100. Profit is 200. My sales is 300 rupees. Sir, is this happen? Is this possible? Obviously possible, guys. If you are using some Apple phone, right? If you are using some Apple phone, the cost of production may be for 10,000 or 20,000 or 30,000. You will get it for 1 lakh. Means you are having more than 200% profit. Having some brand values, no, they will have a more profit. The profit will be only for the name. It is not for the product. Okay. Give me your interpretation. Think and answer, those who are watching recording also. Profit can be greater than cost. Profit can be greater than cost. Percentage of profit on cost is equal to how much? Profit divided by cost into 100 will give you 200 by 100 into 100 will give you 200%. Percentage of profit on cost can be greater than 100%. Greater than 100%. It can also be greater than 100%. Now, these are the 3 prima facie cases which you need to understand to have a better clarity over the concepts. This may not be helpful in while studying that accounting. It may be helpful for your financial accounting. This may be helpful for other areas which you want to know. In that also, there is some intricacies are there, which we are going to discuss in the next class. This class is not at all over. Just wait. Just now I done with basic. In that cost and profit also. Now there's a vice versa concept which you are going to learn. Think and answer. Think and answer. In my case 4, right? I just want everybody to a thinker by just not only to listen. If you're listening something, just think and interpret in your mind. My cost is 100. My cost is 100. My profit is 50. My sales is 150. Sir, you are writing again case 1, na, sir? Yes, sir, I am writing again case 1. Now, we are not going to see profit cost relationship. Now, we are going to find out the relationship between profit and the sales. Sir, what is the relationship between profit and the sales, sir? Think and answer. By just looking into that, by just seeing that profit 50, sales 150, what you are going to understand? Profit is less than sales. It can be less than. Profit can be less than sales. Profit can be less than sales. Now my second part. Percentage of profit on sale. Percentage of profit on sale is equal to profit divided by sales into 100. Profit is 50. Sales is 150 into 100 will give me 1 by 3 into 100 will give me 33.3333%. If something in accounting, you need an accurate value, no, take up to 3 decimal places, 4 decimal places. 33.3333% will give an exact or a most nearest value, most nearest fullest value will get it. Okay, 33.33%. From that point, you are saying percentage of profit on sale can be less than 100%. Basically, if you are assuming sales is 100%, you are getting 33.33%. Then you obviously your cost will become 66.66%. Obviously, it will become what? 66.66%. Or if we compare with that profit towards cost, it is 1 by 2 1. Okay. Now the next thing is another 2 more cases pending. With that, we will easily wind up with the session of today's class. Just listen to an important case 5. Think and answer. Sales is 100. Sales is 100. Profit is 100. What is my cost? Sales is 100. Profit is 100. What is my cost? Think and answer. Think and answer.
Zero, sir.
0. Sir, is it possible? Yes, it is possible. Where possible? Rarely possible. Sir, how, sir? Rarely possible. Sir, some person is giving a gift. You spend something on cost. If something goes out of your pocket, if I am giving you this pen as a gift for your birthday for 10 rupees, this is a 10 rupee worth pen, which I am giving it for as free. What you are having a business-minded person, you are going to sold this pen for making that this having no cost, and you are solding 10 rupee. Again, at same 10 rupee you are solding out. You are not spend anything from your packet to purchase this pen. It is given as your gift. Or there is something very beautiful concept in accounting known as donation. In taxation also donation. If something getting you are free, you are solding off. The 10 rupees your profit. The 10 rupee will become your sale value. So this is rarely possible. Or if something, if you are theft, okay, something you score, you are taken, okay, and then you are solding out. Unknowingly, in Tamil we call திருடி விக்கிறது. அதெல்லாம் வித்தோம் அப்படின்னா we will get a value of. This is rarely possible. Now tell me, compare with profit and sale. Tell me, profit can be equal to sale. This is my first research or analysis on the part. Next, percentage of profit on sale is equal to profit by sale into 100. Profit is 100. sale is 100 into 100 will give me 100%. Third interpretation is profit of percentage of profit on sale is equal to 100%. Profit on percentage of sale is equal to 100%. Now come to the next part. Come to the next part which thinks in your mind. Most of them won't think. Sales is 100. Profit is 300. What is my cost? What is my cost? What is my cost? Think and answer. What is my cost?
Minus 200.
Totally worst. How the cost can be minus 200? There is nothing. This is not at all possible. This is not at all possible. Sales itself is 100. How the profit can be 300? So this is not at all possible. Everybody will think it is minus 200. That's how I'm giving a weapon for you to go for your articleship or an internship or for the other things. Just think. Profit cannot be more than sales. Profit cannot be more than sales. Percentage of profit on sales in this case cannot be calculated. Percentage of profit on sales cannot be greater than 100%. Always, if you're comparing profit on sales, surely it should be on 100%. Nothing more than that profit will go if you're competing on sales. I will give you one thing, which somebody come to you and show you, do you know accounting and all? Again, you will ask a repeat question. I will give you one question. Please solve me an answer. That question which I'm going to give you a trick, which you will never forget in your life, which will save lots and lots of your goodwill in your profession. If somebody asks you continuous question, ask the repeat question again. Profit is 300% on sales. Profit is 300% on sales. How much on cost? How much on cost? Or I will change it to profit is 200% on sales, or profit is 500% on sales. How much on cost? This situation will never ever come. Profit is 500% on sales is how much on cost? It is not at all possible to have a on sales. You should have a 500% profit. Because why I am saying is, you should know cost plus profit is equal to sales apart. Cost plus profit is equal to sales. If I need cost, it should be sales minus profit. If I say sales is 100, profit is minus 300, how it can be minus 200? How the cost of production can be minus 200? It should be in a positive value, then only it is a cost. It can be zero. It cannot be negative. It can be zero. It can be more than zero, but it should not be less than zero. That is in negative values, it should never come cost. Because you're spending something right. How it can be on negative values? Just think and listen. The next exercise which I'm going to give you is, which is a assignment or homework, what you can take. I just want you to find out profit percentage on cost and sales. If I give you some cases and you will write down, if profit is 25% on cost, again, if profit is 50% on cost, you should know how much on sales you should answer. Okay. If profit is 33 1/3% on cost, 33 1/3 is nothing but 33.33% on cost. Okay. Next thing, 300% on cost. 300% on cost, 500% on cost. Means profit is 500% on cost. Next, 20% on sales. Next one, 25% on sales. Next one, 50% on sales. 50% on sales. 80% on sales. 100% on sales. Or you can like write down 110% on sales. If I write sales, you need to answer costs. These are the 6 to 9 items which I given for you to understand the profit margin, that and that. The next discussion, the profit margin, that what I can tell, without an intention, my word has come, profit margin. This is a one term. Next term is markup. Okay. In the next class, we will understand what is margin and markup, and then slowly move on to journal, and then some source document, and then we will move on to a company corporate accounts to prepare a journal to understand the depth meaning. So with this same curiosity, I'm going to wrap up the session. Just think about margin, markup. What is a margin, markup? Everything you will think about. I will give you enormous clarity over this concept on the next session. With this signing off of Sudarshan from Hari Academy. Have a great day, guys. If you have enjoyed, do like, share, and subscribe to our YouTube channel as well. And if you have any doubts, queries, you can surely WhatsApp me to my number. And once again, have a great day.